Well, welcome, Warren, Tony, and Frank. Thank you very much for coming today. So for those of you that don't know me, my name is Troy Eady, even though my name has changed to Warren Otter on the screen here. I don't know how that's happened. But yeah, so look, the purpose of these webinars is all about providing some people like Warren, Tony, and Frank to help support us during this time. So these webinars are about getting an update about all of the panel members sharing some of their experiences and what's been happening. It's been great to hear from each of these people, some of the stuff that they've been doing, which is things that I potentially haven't thought about or our clients haven't thought about. So I think it's going to be great for them to share that. And then after that, just asking them, what are some of the things that they would like to share in terms of providing some direction moving forward. So what we'll do is to start with the structure of this webinar, we'll be starting with Frank, going to Tony, then to Warren, then myself. Each panel member, Rob, if you could flick to the next slide, each panel member will answer these questions. So, who are they? What do they do? What's some of the things that have been happening in their space that would be of value to all of you? And then from their perspective, what is it that they suggest that you start to think about moving forward? Okay, so with that being said, Frank, welcome.
Thank you very much.
Yeah, so if we could start with you, Frank, if you could just introduce yourself and answer some of these questions.
Sure. So my name is Frank Versace. As Tony mentioned, I'm the Managing Director of Relationships for Judo Bank, which is, for those who don't know who we are, we're I was about to say we're a new to market. We're not as new as we used to be, obviously, but a dedicated business bank that was initially established over 2 years ago. We've been in the market now for over 12 months as a registered deposit-taking institution, and really trying to shake up the small business banking sector, which has largely been, overly commoditized and overly industrialized by the major banks over the last quarter of a century, really, by reintroducing the empowered relationship manager who, free from a policy web, is able to make common sense decisions again. And potentially the existing climate provides us, an unprecedented opportunity to demonstrate what we've been telling the market for the last couple of years, which is that, every business is different, every business circumstance is different, and the opportunity to meet with a banker, given how important finance is to any small business, and explain your unique circumstance has probably never been more important. So that's kind of who we are. We've been around for a relatively short period and have done some pretty cool things in that time, and we see the current market as an enormous opportunity for us to do our bit in what is a community-wide, the epidemic is affecting the entire community, and everyone needs to think about things potentially differently to what they have in the past. And, definitely at Judo, and hopefully the whole finance sector is recognising that challenge and is working on different ways to step up to that particular plate.
Yeah, great. Thanks, Frank. And so could you share a bit about some of the things that is happening in your space with some of your clients?
Yeah, so, obviously as a dedicated small business bank, this is a crisis that is different to most other economic crises that we've dealt with in the past, in that it is a social and human crisis in the first instance. And that is complicating the policy response from an economic point of view, in that, the first port of call is to make sure people are safe, and that we protect people from, the current issues from a medical viewpoint. And that's having, spillover effects into the economy, as everyone kind of knows. And it's having a disproportionate effect, we think, on the small business community. And as a dedicated small business bank, we think that sort of gives us an opportunity to potentially think about things a little bit differently. Some of the things we're seeing is that, lots of small businesses are impacted traditional methodologies about how you might assess finance, how you might assess relief from a banker's point of view are thrown out the window. So never before have the historical financials of a business been less relevant in trying to predict what the forward outlook is. And so a lot of the models that traditional banks use around, box ticking and all the rest of it, have never been less appropriate, I think, in terms of understanding how we can best support the small business sector. And so what we're seeing is lots of our customers coming to us with, situations that we've never seen before. We for example, we bank a lot of businesses in the hospitality sector. And if you told us 6 months ago that they would need to work out how they weather a storm over the next 6 months, where some of them are dealing with revenue that's gone from 100 to 0 in a very short period of time, the traditional models of the finance sector don't really apply. So being able to think creatively and empathetically about that sort of situation is one of the things we're seeing really, really consistently.
Yeah. And how are you seeing the uptake of loans happening at the moment?
So the first instance, I think back to that week in March when a lot of the social distancing measures were, imposed upon us in a quite a drastic for reasons that we all understand, and quite a very quick manner. Initially, the wave was, hey, what does this mean for me? How do I batten down the hatches over the next 6 months and implement solutions that defer expenses, primarily in our sense, principal and interest repayment on debt that had been previously borrowed, and all the rest of it. How do I avail myself of government stimulus and all that? And what we've seen since is, so there's still lots of those sorts of conversations going on, but there are still businesses that are recognising there are opportunities in all this, and are looking to access liquidity and capital to grow a business, or to purchase something, or to to survive the current environment. So new lending, it really dropped off a cliff as people tried to get their immediate house in order. But we've seen a rebound over the last 2 or 3 weeks, and being able to deal with those opportunities and measures in a timely way has been a critical part of our focus in terms of how we can best support the business community. Yeah,
that's great. I know something we've already talked about is, one of our clients in particular at first, just wasn't going to entertain any financing because on the surface things seemed fine, and things still seem okay. They're in the construction industry, but after doing some analysis and looking at what the future might look like, getting finance at the current rate to be able to support growth in this time could very well be an option. So it's interesting to start seeing people move from that survival mode to how can we use some of these new policies or procedures to be able to support growth so that they can come out of this potentially a bit better.
Absolutely. The thing that I've really learned through all of this is the degree to which when businesses are adaptable. I've seen it in the workforce that I look after, and the businesses that we support is, whilst there was an initial shock, and a lot of what we've had to deal with is shocking, the swiftness with how we've readjusted to the new normal and the consideration we're now giving to what a re-emergence looks like has been, one of the more encouraging things on a human level to observe, actually. And how quickly businesses have thought, okay, so the old world doesn't exist. It may not exist at any point in the future. What adjustments do I need to make to my business model, the way I look after my people, the way I service my customers, and how do I articulate that to a financier who plays a really important role in all this? Has been a really interesting thing to observe, and one that we've learned a hell of a lot from.
Yeah. And I think it's interesting. So that last time we did a webinar together, you talked about the V shape, the U shape, and the L shape. And then now, talking about how, because there's a lot of talk about, when's this going to go back to normal? But your previous comment was, the normal's no longer almost a bar to get back to straight away. So from your perspective, looking forward, maybe sharing a little bit more about the letter shapes, and then how do you see things, or what would be your advice for people to start, moving forward to the new future?
Yeah, well, so what we needed to do definitely as a business, this is what the whole industry we think should be doing, is the old world, the old methodology where 2019 figures are reasonably predictive of 2020, unless there's some material thing that we need to consider, is no longer fit for purpose. And so what we need to do is have an ability to look through the crisis and understand whether, a good business operated by a strong business operator is still going to be a good business operated by a strong business crisis at the end of this. And whether there are, what the prospects for each industry and each business are in terms of re-emergence. And, as a rule of thumb, we're talking about the V shape, the U shape and the L shape, and it will affect different businesses and different industries in different ways. So if you can think about a dentist, as soon as the lockdown is lifted, you imagine that people are going to go back to the dentist and get their teeth checked up and that sort of thing. Restaurants may have a slower emergence from this because there may be both legislative and behavioural impacts to the hospitality sector. And so how do we support that as a finance industry? It's having real conversations with the business owners that we support and understanding, what liquidity do they have access to, what support can we provide, what stimulus measures have they been able to avail themselves of, what's the gap left at the end of that. And that's really a conversation that you need to have on a case-by-case basis.
Yeah.
So, we're having a detailed conversation as much as you can in an outlook that is as unclear as the one we're facing into is. But ultimately, we've got an incredibly important role to play in making sure that the lubricant of liquidity is still being pumped into the economy, because if we do the wrong thing, it could have dire consequences for the whole industry, for the whole economy.
Yeah. Okay, thank you, Frank. So look, I've noticed there's some questions coming through, which is great. So please keep loading up the questions. After we talk to each panel member, we'll come back and answer all of your questions. Tony, welcome.
Hi, Troy. How are you?
Yes, doing pretty good. Yeah, I've been able to witness my little man start walking. He's gone from just stumbling to making a mess of everywhere.
Troy, every day it goes quick, mate.
Yep. So Tony, can you share, just a bit about yourself, and then, what have you been seeing? What's some of the things you've seen?
Absolutely. So my name's Tony Rule. I'm a director at TAG Financial Services. This Friday we'd be celebrating 23 years of existence.
Wow.
But I don't know if there's any restaurants open to have a meal, so we might have to pass on that.
You're any good at cooking?
I have a red wine instead. So
Okay.
So look, and what we're about is really looking after small and medium-sized business owners. Our view really is that, particularly at the moment, business owners are taking all the risk, they're working the hardest, and often they get paid the least. And so we're all about balancing that up and making sure that there's some equity there, and really about just making sure that all of their hard work, they get what they deserve out of their business. So that sort of sums up what we do. So in terms of what we're seeing at the moment and what's been happening in our space, look, really the last 3 or 4 weeks has been about two things: providing information to people. There's been a lot of a lot of stimulus that's been announced over the last 6 weeks. JobKeeper, it's a $130 billion program. There's a heap of questions. Every client situation is slightly different, so we've been helping interpret that and provide information to clients on that front. And then the second aspect has really been around almost triaging our support to clients. So, as you can imagine, we have clients that are restaurants, we have clients that are entertainment centres and those things that have shut down immediately. We have clients in travel. So obviously they've needed a high level of support through this period. And then we have other clients that are at this point in time, and touch wood, fingers crossed, all of that, they have not been affected to any large extent in terms of sales and orders, and that's great. And then we've got a lot of clients in the middle where they have clients that are suffering, or they have situations where social distancing is having a significant impact. So it has been a really interesting period of time for us in terms of just getting a head around the specific issues of each business and for each business owner, and then assisting where we possibly can. So that's the fun.
Yes. So look, I know you, because you're a reasonably big accounting firm, but your clients, might not be indicative of the country. But what are you noticing? Like, out of 100%, how many of them have been eligible for JobKeeper, meaning they've dropped below 30%?
Look, we would say 7 or 8 out of 10 are looking eligible.
Okay.
So, and look, some are not eligible right now. So, some of them we're sort of saying they don't meet the March or April test for the decline in revenue, but looking at their orders and looking at what's coming up, we're sort of saying, okay, it could be May, it could be June, it could be July. So, so it's not like it's dropped off a cliff that has for some clients, but for other clients, it's sort of, okay, we're coming into a bit of a decline. So there is, the funny thing about it is that there is no average. It's really just a case by case scenario. But look, I would say 7 out of 10 are either getting it or will get it over the next 6 months. So
okay. Yeah, great. Okay, and so just final question. From your perspective, what, if you were to give advice to business owners, what would you like them to start thinking about or focusing on moving forward?
Look, the key for businesses and business owners is making sure you've got your cash flow line. And obviously, working with people like Frank to sort of say, okay, what finance can we generate at this point in time? Now is more than ever the concept of a fighting fund, which we advocate for business owners. That fighting fund now is the sort of thing that will keep you in a position of strength and will get you through, however long we're getting through this. And look, thankfully, from a health perspective, it looks like as a state and as a country, we're getting on top of what we're needing to deal with in terms of the new cases and all those sorts of things. But in terms of, okay, how much longer do we have a lockdown? How much longer are we staying at this stage? And then are we going to jump? How long will we be, with one hand behind our back? This is probably and so look, that's all crystal ball stuff. Each day there's a new piece of information that we've got to factor into the realms of things. So really for us, key things, cash flow. It's about making sure that where a business owner can access JobKeeper, we're encouraging that. And really it's about also making sure there's been a lot of things that were announced in the first 2 government stimulus packages that a lot of people have forgotten about too. So things like deferring the lodgement of tax returns, or deferring the payment in relation to tax returns and activity statements. That's still a very valid and useful thing to do. In terms of things like the cash flow boost, which is not really cash flow, it's a reduction of what you need to pay to the tax office in relation to your PAYG withholding. There's some taxes that can come back as well. So there's a number of things, and really the business owner's got to work out, okay, which ones are going to mean the most to me, prioritise and factor that all into the cash flow. And that's in terms of getting money in and controlling their costs out. So making sure they're negotiating with their landlords, negotiating with major suppliers, all those sorts of things. So a crash course in terms of business management for everybody at the moment.
Mm-hmm. Yes. Thank you, Tony. Yeah, so for those of you out there, if you've got questions for Tony, make sure you load that up into the Q&A and we'll get round to them soon. Warren, welcome.
Thank you, Troy. How are you?
Yes, doing great. Yeah, so Warren, would you like to share a bit about yourself? And then, what's been happening in your space?
Okay, quick bit of background for some context. These days, whilst I have my own advisory firm, which is around growth solutions and mergers and acquisitions to help businesses grow, my background has been an owner of a medium-sized business, starting back in the late 80s. So my first introduction to business was that recession we had to have that our famous Prime Minister back then told us we needed. So this sort of climate is different to that, obviously, but it's still a big, it's a big challenge. So that's sort of what I do these days. I actually help people from a business owner's point of view really understand the issues around growth and how to lean into options like mergers and acquisitions. And I'll get back to that later on, because I think that's going to be one of the things on the agenda towards the middle part to the latter part of this crisis, and whatever that time frame may mean. So what's happening in my space at the moment, the clients that I've been dealing with and have been dealing with for quite some time, I do a bit of advisory work around that growth space as well. I'd have to say probably, like Tony was saying, probably about 8 out of 10 have been getting their ducks in a row in regards to making sure they can avail themselves of the different government packages and assistance offers out there. And probably going back a month or so ago, most of them were, but not being unfair, but sort of starting to wave that hands in the air and getting a bit worried about life. And then the packages were announced and they started focusing on that. And correct me if I'm wrong later on, Tony or Frank, but now that we're sort of seeing the light that I think it's the end of next week or the start of the following week that the JobKeeper payments will start to flow through, and that's sort of the money flow starts to come from these assistance packages. People are just starting to think about also that 11th of May discussion in mind, which we don't know what the 11th of May really means. It means they're going to tell us something. There's a little bit of hope there. So I'm finding at the moment that some business owners are just starting to, in between the panic attacks and making sure that they're able to get the JobKeeper, starting to think what business might look like beyond the 11th of May or beyond the JobKeeper payments coming in. But what I'm finding, and I picked up on Frank's conversation in the last session we had a few weeks ago about the V, the U and the L, which I really liked, and thanks for picking that up, Troy. I think there's another one that's potentially is an option, and that is a reverse J, the old J curves. We love J curves. And that is businesses drop down and they never quite pick up to where they used to be, or there's a very long lag to get back to what normal will be. And that's something that a few people are starting to think about already. I've got clients at the moment who are not going to hit the 30% down. They're going to be in that 20 to 25% down. And I got off a Zoom meeting with them today and I said, we can't see the next few months dropping much further. We're going to be in that 20, 25% range. So we won't qualify for anything. Their concern is they could be 15 to 20% down for the next year or two. How do they reshape and change themselves to be relevant? Yeah. And I think a lot of businesses, from my point of view, are starting to have to get their head around that concept that the new normal may not be our old normal. That probably wasn't put that well. But I think you have to model between minimum 10, 15, up to 30, 40% down for an extended period of time. And dare I say it, I picked this up on a seminar a few weeks ago. I know that the government's talking about a 6 month, and depends on which dates you want to look at, the 24th or the 27th of September for different support or different packages. And they may be able to extend that, but they will turn it off. And we've been sort of talking about the fact that different businesses at a different time will have a different level of health. And if you liken it to being the health system, you've gone in there for an injury, and then all of a sudden the doctors go, we're walking out, you've got to go out as well, and you've got no more support. So I think businesses need to use these next few months, and I'm encouraging them to really think about what it looks like at the other end, and not just be in this state of, we're okay at the moment, because the word hibernation has stopped being used. But I think people have still got in their mindset that we've been protected at the moment and we'll be okay. But I've written up a few graphs and they're not very fancy, so I can't show them to people. But basically, your revenue's coming down, your profit's going down even further, but your debt's going up at the same time. and then they're going to pull the plug on you for support. Now, I know Frank won't, and the banks will be good and keep supporting, but the government support will stop, or it'll slow right down. So I think that's probably one of the concerns I've got at the moment. I'm already seeing in the M&A space, people starting to stick their hands up and saying, time to get out. I'm not sure if I want to come out the other end with all this debt. So I'd rather keep building my debt during this period and then have to climb over it. I was thinking of the next 2 or 3 years of retiring anyway. Why am I going to have 6 months of torture and more debt? So there's some potential. I think there's going to be some oversupply of businesses at the end of this. The other thing which hasn't been probably talked about broadly, and I'm happy for anyone to correct me or pick this up later on, is that the government's also talked about turning off immigration for quite a period of time. So the underlying demand, and then on the whole facet of areas, is going to drop off. So that's what I think is going to keep the demand for businesses or their revenue going forward a little bit lower than what they considered it was in the past. And I've just been trying to brainstorm, and I think I'm encouraging business owners to sit back, actually almost meditate for half an hour and relax and take a deep breath and forget about the day-to-day and start thinking about what can I think about that's different going forward, and what impacts could the new economy have on me, and how do we adapt to that? Because just one little thing, if not little, it's actually quite large. If immigration does stop for a period of time, the demand on housing and the flow on from housing, I came from a background where we used to supply the housing industry many years ago, and we could completely link a whole sector to the housing starts. And I would suggest over the next, and that's the other thing too, some businesses have got a lag effect in when they're going to be affected. There could be builders right now who are just finishing off projects for the next 6 months and then have no orders. So it's probably more a commentary than what I'm seeing, but that's what I'm seeing at the moment. And business owners are starting to get their head around, and probably do need to get their head around being different, thinking outside the square.
And so, look, the main reason why I think you're great to be on this panel, Warren, is talking about M&A, so mergers and acquisitions. Because, I know myself, I'm not normally, it's not something that I see day to day. And I would assume a lot. So we've got quite a number of people on this call today, which most people probably haven't thought about that as an option. Particularly if you can get finance at really good rates, it might be worthwhile looking at competition or someone around the corner where you can merge everything together, reduce a heap of expenses, and potentially move forward. Are you able to share maybe a bit more about what's happening in your space and what you see could be some good potentials for people to potentially merge, reduce expenses, and actually come out of this potentially in a good space?
Yeah, look, I'll just touch on it briefly because there's not a lot of action yet. There's a lot of anecdotal people putting their hands up, potentially wanting to sell. There's a couple of people that I know running around looking for opportunities to buy. But personally, you put 1 and 1 doesn't make 2 in business. 1 and 1 could be a disaster, or 1 and 1 could be 3 or 4. And I think what will come out of this, as I was saying before, with the lower level of income, a lot of businesses are going to realise, and I'm not a real merger fan, but I wouldn't be surprised if there's some concept of people wanting to merge together to reduce their operating costs going forward. Rather than come out the other end with, the cost that they've had before with the lower income. So it's too short a session right now to go through all the numbers and so forth, but literally in a normal economy, 1 and 1 can equal 3 or 4. But in this, you hope that 1 and 1 at least equals more than 2 for a period. And there will be some fallout from this because I think the overall economy is going to be quieter. So I think there's still potentially going to be some job losses around the state and the country going forward. It's not just going to be, but I'm thinking about a micro level, of a business by business level, how to survive and look after the majority of people and majority of business. I think there will be a lot more activity around this M&A space. And also remembering the other thing, which I don't want to talk about too much, but I'll be interested in chatting to Tony and Frank later in this about, is the government also has given virtually all businesses an extra 6 months of safety around the safe harbour and the liquidation laws. Now, when that turns off, I don't think people realise at the moment what that means for them as well, what they're potentially going to face.
That's right. Yeah. So just touching back on the 1 and 1 doesn't equal 2. One thing I always find interesting when I talk to you, that if 1 equals 0.1 in profit, that 1 and 1 might equal 1.5, but the profit might equal 0.5. Once you go through the wash. So your revenue may not double, but your revenue might go up a little bit, but your expenses and your overheads and resources, do get reduced quite significantly, and the bottom end can be quite interesting. I think it's really an interesting space to talk to you about, who else is in the space that may either want to sell, or someone in this call might want to sell to someone else, but still stay part of the business. And what does that look like? What does it mean? I think it's a really interesting conversation.
Your last conversation there I think it's really important. That's why I think this is going to be a little bit different than traditional markets. I think more people will be willing to have a, call it, merger earnout discussion rather than a straight sale. And I think there's going to be a lot more consolidation of businesses or amalgamation of businesses. And I think that's where the architect comes into it. You have to architect this together and get people on the same page and realise if someone's going to survive and get strong out of this, that they have to work together. And there's a fair bit of, it's not a lot, there's a fair bit of work to be done to put the right people together. But I think there'll be a lot of activity in this space as we move closer towards the second half of the year. Or even in the next few months after sort of the money starts flowing in from JobKeeper.
Yeah, no, good. And so, because you and I have both been talking a lot, and we can explore it now, but with the government grants that are available, so you have a list of potential grants. Is that correct?
Oh, look, I think everyone's got most of them. Tony's been great at sharing that. There's been emails flying around everywhere. I have got the full list, or I think it's the full list, but we're also aware of a couple of other old grants that have been on the cards for the government for years that people have probably forgotten about now and aren't even aware about, that they need to throw into the mix as well, that actually help them with business development and strategy planning right now. And that's what I'd encourage people to start to be aware of.
Yeah. No, good. So any final thoughts, Warren, in terms of what to focus or look forward about?
To look forward, I think it's really about thinking outside the square. I know I've been having some discussions. We've all heard the anecdotal stories about even McDonald's now selling groceries out through the drive-through. Some of these are going to be temporary things that people do, that businesses do, but others are going to be opportunity for them to really sit back and restructure what they do and what their market looks like in the future. So, and that's where I think, I don't want to harp on it too much, but that's where the mergers and acquisitions can come into it too. You can actually end up bolting on another business that does something complementary to what you do and actually expand your offering rather than staying in your same niche. I've been a little bit concerned about certain people going, but this is what we do. Okay, but if the world doesn't want it anymore, think wider.
Yeah. No, great. Good. Yeah. Thank you. Okay, thank you. So now I'll just share a little bit about myself, and then what we'll do after that is we'll get into some of the questions. So for those of you that don't know me, my name's Troy Eddy. I run a business coaching firm called Business Success Systems. So we have a team of experts that specialize in the implementation of systems. So two main things particularly is the development and implementation of a strategy, or the implementation of operational systems to support and scale your team, even regardless of location. So what I wanted to share is just some of the things that we've been working with our clients on that are quite, and I've made these quite tangible, quite practical, that you can just implement straight away. So I've got 5 of them here. So the first one is about meetings. So a lot of us are getting a lot better with Zoom. So for those of you that or your team are working from home, I think it's really important to make sure that you have a very firm structure in terms of how you're running your meetings. So how you're setting your team up, how you're packing them down. Instead of one person talking all the time, how is each person presenting what they're working on, what support they need, and what they have or haven't done. So I think that's really important. So getting really good at supporting the team to structure their day and their week. And then tied onto that, something we've been helping our clients do is run Zoom meetings that are just to hang out. And some of them are even a bit more structured and just talking about, how are they setting up their home environment, even just casual chats, casual hangouts, just to keep the team together, and just talking about life. So I think that's really important. So that was the first one, meetings. The second one is focusing on the data. So Tony, you touched on this before about knowing your numbers. I think what I see a lot is there's a lot of emotion going on, a lot of stress, a lot of anxiety, even, forms of depression. And I just find, we use these emotions because we think they're helping us. But at this stage, I'm finding it's not helping as much as people think it is, versus just looking at the data. So, you'll see a client, or you may be feeling these emotions. I think the best thing to do is take the emotion out of it and look at your data. How many inquiries you're getting, how many quotes you're getting, how much of those are winning, where are they coming from, how much work do you have in the pipeline, where's that work coming from, how much you're getting paid, who is paying, who's not paying, because it's that data that helps us then put a system or a process in place. You might have to start charging up front versus after, because you might be selling a lot of things and implementing a lot of things, but you're not getting paid. So I think that's the second one, is really focus on the data. If you're feeling emotion and a tense emotion, I would turn to the data. If you don't have the data, I think it's really important to get that data. The third one, which I think Warren's touched on a little bit, is being really clear on your strategy. I think right now it's more important than ever that when you have team meetings, the team has to be unified on how to get out of this. What are you counting down? What are you, if you're pivoting, how are you pivoting? Is all your sales teams or your partners or key seniors, is everyone clear on, what parts of the market are best to focus on? The thing that I get most from the panel members here is that if you're waiting for normal to come back, so the V shape, it could drop off and come back, I think it's really unlikely for any of you to experience a real sharp drop, increase. I think, more likely, and Frank, you might be able to share a bit on it, there's going to be a lot of U shapes, and it's how long will that U be for you? So I think if we start to focus more on what does that U shape look like, which clients can I help the best throughout this period if it never goes back to normal, and then making sure everyone's unified around that. So what systems do you need? Do you need better ways to communicate to them now? Do you need white papers? Do you need videos? Do you need to be interviewed on a webinar? What is it you need to start to reach out to those people, to play in those spaces, to start to move forward? Then the next one, the fourth one, is compartmentalization. So I think it's really important that you don't spend all of your time on survival. So if you've got survival and you've got thrive, I think, 9 to 5, in the sales industry, 9 to 5 is prime time calling hours. Outside of that, you do your admin. But I think for owners and partners of firms, it's really important. 9 to 5, you're there for your team. You inspire your team. You have goals. You're moving forward. You're focused. It's not just surviving. It's not just settling on, JobKeeper. It's how do we utilize this to really grow, so that 6 months from now, we don't even need JobKeeper. You're just growing. But then you compartmentalize. You've got to allow yourself space to really be able to communicate with people around what's happening. And then the last one is record as much as possible. So I'm seeing a bit of frustration with some of our clients when they communicate a change in a process, and they're having to communicate, call, and then they're frustrated because people aren't following the same process. Just film that process, how you want people to communicate or what you want them to focus on, and then send that video out. I think you'll find you'll get a faster uptake in that new process or new way to communicate. Yeah, so they're probably the key things that I've noticed that I thought was worthwhile sharing. So for me, I think what to focus on and move forward is to start thinking about how can you start to thrive. I think we've had the time around survival, making sure we're looked after, and now it's time to thrive. So what I'll do is open. You can all jump back on, and then we've got Rob here. So Rob, are you able to share with us what some of the questions are. And then for all of you listening in, if you've got any questions around some of the things that we've talked about, please start loading up the questions and we'll stay until we answer all of them. Over to you, Rob.
Yeah, so our first question here, they heard of a situation a couple of days ago where someone was due to settle on their new property. So funding was in place, all documents signed, and then 2 days before settlement, the bank asked to see a copy of their most recent payslips, which due to the fact they were only on part-time wages temporarily due to COVID-19. So the bank pulled for finance and would not settle on the property. Have you seen examples similar, and what are your thoughts on this situation?
So I think that one's for me. So the really short answer is that that's a disgrace. But I think the longer, the sort of the broader perspective on this is it's a brief history on the finance industry, specifically in Australia, but even in a global context. The last crisis in living memory was the GFC. The last crisis had sort of profound impact. And that was a crisis caused by the finance industry that required bailout by the rest of the community. And without the support of the rest of the community, the finance industry would have, whether you were doing the right thing or the wrong thing during that time, the contagion that existed in that time would have resulted in the whole industry collapsing on itself. And we needed the taxpayer to